Hey guys, welcome to another episode. My name's Jose Najarro, and like always, I have my buddies Darth Bear and Bull Solo ready to keep track. Today, we are going to take a look at AMD's earnings for quarter three, and this is going to be the beginning of the semiconductor episode. The last series was the video game series. This time, we're going to take a look at semiconductors. So, I'm definitely going to take a look at AMD, Intel, and Nvidia. So, let's get started. So all the information that I found here comes from AMD's investors website. I also took a look at Seeking Alpha to take a look at their transcript of the earnings call, and I obviously went through the 10Q report. So right off the bat, the first thing we're going to take a look at is revenue. And revenue here, earnings was July 30th, 2019. Earnings per share were 8 cents. It beat by 0 cents, so it met expectations. Revenue was $1.53 billion, and revenue did have a surprise beat of $7.63 million. It did meet earnings per shares results, and it actually beat revenue surprised by a bit. So for that reason, we're going to give the first point to Bull Solo to start off the game. Next, we're going to take a look at revenue breakdown, and here we just want to see how this revenue that it collected is broken down. In theory, we don't want to see revenue to be all focused in one sector of the company, because if that sector goes bad, the rest of the company can go bad. So here we can see AMD is pretty much broken down into two categories. First is computing and graphics. And in computing and graphics, for those that don't know, this is where their GPU and their CPU servers, CPUs are at. Next, they have the enterprise, embedded, and semi-customs. And here's where they have the Epic server, which is the huge server CPUs. And they have the semi-custom semiconductors. So here you also see stuff for PlayStation 4, Xbox 360, and any generation custom chips that they do will be found here. So we can see net revenue, a huge portion of net revenue comes from computing and graphics. The net revenue this quarter collected $940 million. Enterprise, embedded, and semi-custom collected almost $600 million, $591 million. But even though it has revenue here, you can see is broken down. 2/3 comes from computing and graphics, and about 1/3 comes from enterprise, embedded, and semi-customs. But operating income, so this is the income, comes more from enterprise, embedded, and semi-customs. So that's one thing to take a look at, right? So even though a huge portion of the net revenue comes from computing and graphics, we see that the majority of the operating income does come from enterprise, embedded, and semi-custom. So I do like this breakdown. Even though computing graphics contains such a high net revenue, we can see that it's not the big portion of the company. We can see that the company, even with $600 million of net revenue and semi-custom, it can still produce a lot more operating income. So I do definitely like this revenue breakdown, and for that reason, Bull Solo gets another point. Next, we're going to take a look at just something on how their inventory is looking. So this is inventory from June 29, 2019, which was their quarter three, and then from December 29, 2018. So right now, the company is sitting in about $125 million of raw material. The company, same time 6 months ago, was sitting at $134 million in raw materials. So I definitely like that raw materials went down. That means this company is producing materials and it's not wasting away. So I definitely like to see a drop down in that. Work in process. So this is inventory that's being made at the moment. Work in process 6 months ago was $354 million. Work in process right now is $673 million worth of inventory. And that to me is pretty good, right? This work in process means that this company is trying to stock up for something big. It's most likely the holiday season that's coming up soon. So they're definitely stocking up pretty big on items. Finished goods is the next one, and finished good this quarter is sitting, these past 6 months is sitting at $217 million compared to December 29, 2018, which was sitting at $357 million. So that's also pretty good, right? This company has sold off its finished good. It has less finished goods than it did in December 29, 2018, and that to me means one thing, that this company is selling its inventory. So even though the total worth of inventory is worth more now than it is then, they do have less finished goods, so that means material is being sold. They have less raw materials, so that means they are making products with their materials, and they have such a huge amount of work in process. So this company is definitely stocking up. So next, let's talk about some of the products here. Here, we're just talking about what the company has done this quarter. As we can see, they did release a bunch of products this past quarter. They released the new CPUs, new GPUs, and new data center CPUs. They've also released their new Zen 2 CPU core, which is better than their previous architecture. They added over 40 new consumer and commercial Ryzen mobile processors from leading OEMs year to date. So that to me is always good news. I remember about 2 years ago, you would not find a laptop with Ryzen or an AMD or an AMD CPU, and now you go to Best Buy, you go to Amazon, and you start to see them more frequently. So that's definitely great news. Amazon expanded availability of their EPYC processor in more than 15 regions. They did have some good stuff with Microsoft. They introduced a new gaming architecture for their console and cloud gaming. They announced a multi-year strategic partnership with Samsung, and Apple announced Radeon Pro Vega. So we can see there's a lot of good news, and also AMD will power back-to-back game consoles for Microsoft Sony. So these are some great things that happened in the quarter two, and it's always good to see some big names, right? We see Sony, we see Microsoft, we see Apple, we see Amazon, we see over 40 new consumers from leading OEMs. So this is Asus, Dell, HP. So this is definitely great news for AMD, and I'm liking how the company is going on further. Next, we did take a look at the revenue breakdown, and now I want to take a look closer into what the company is doing within these revenues. So the first thing we're going to take a look at is enterprise, embedded, and semi-customs. And here the main thing here that we're going to talk about is the EPYC server. So the EPYC servers are the huge data center CPUs. So first thing, net revenue for this past 3 months was $591 million. It decreased 12% compared to the same time last year. 12% is definitely a huge hit in their revenue. So the main reason for this decrease is because of just lower sales. That's pretty much it. But it was partially offset by higher sales of their EPYC server processor, and that's definitely a good thing to know. Operating income was $89 million for the 3 months and for this quarter, and compared to operating income of $69 million the prior year. The improvements in operating income was again due to higher EPYC server processor sales, and it was partially offset by higher operating expenses. So we can see that the EPYC server processor is definitely doing pretty good for the company, but we can see there was definitely a decrease in revenue by 12%, and that's not something we like to see. Next, we're going to take a look at computing and graphics. Computing and graphics net revenue was $940 million for this quarter, and it was a decrease of 13% compared to the same time last quarter. So this is both sectors did see a decrease of low double digits. Last was 12%, and this one was 13%. The main result for the lower revenue was just lower graphics sales, but it was partially offset by a 5% increase in average selling price. So here, right, they're just pretty much saying that this revenue drop was mainly because they did have lower sales, especially in the CPU sales, because there was a decline in blockchain-related demand. But they did see an increase in average selling price of their Ryzen processors, which have a higher gross profit margin. So that's good. That's definitely something to keep track of. Computing graphics and operating income was $22 million for this quarter, compared to $117 million of same time last year. So we can see operating income was so low this time compared to same time last year. And it was primarily driven by lower sales, and also they do have higher operating expenses. So right, I did talk about that. I did like the revenue breakdown of the company, how the company is not all focused in one sector alone, and we gave Full Solo a point. In this one, we see that both those sectors did see a decrease in sales, And for that reason, we are going to give a point to Darth Bear. This is the first point for Darth Bear. And we see that it's definitely not good to see a decrease in revenue in both sectors. Next, I just want to take a look at some updates on what this company is using its money. Research and development expenses for the company was $746 million for this past 6 months ended June 29, so from January to June 29. It did increase by 46 million compared to the same time last year. And this increase was due to product development in both sectors. So that's definitely good to see. I definitely like to see that a company is increasing their research, their R&D, right? R&D is such an important part to maintain, to keep the company intact. And we see that the AMD has increased the amount of money they are spending in R&D, and that's definitely great news. The second reason for for this expense is pretty weird, as well as increased stock-based compensation expense. So this is something that I don't like to see, and it's something to keep track that this company is using more money for stock-based compensation expense. Gross margin was 41% for the 6 months compared to 37% the prior year. So that's definitely a great news to see in gross margin. Such a huge jump of 400 basis point for that. And they say that this is primarily driven by higher sales of Ryzen and the EPYC processor. They both have higher gross margins than the corporate average. So that's, again, great news. We are seeing that gross margin increase. Next, we're going to take a look at shareholder return. This company has no buybacks or no dividends. This company is actually diluting some few shares. We're going to see in a bit that this company does increase the amount of shares over the quarters. But usually a growing stock usually does this. It has no shareholder return, and it usually does have a selling. It does sell some more shares and dilutes more share. And that's what you end up seeing this. So for this, I'm not giving a point to either Darth Bear or Bull Solo. All right, so next we're going to take a look at cash. And here, the total cash. This company maintains a healthy $1 billion worth of cash. And it definitely has maintained that for the past few quarters, as we can see here. Right now, it's sitting at $1.1 billion in cash. It used $70 million in this past quarter to pay off asset-backed loans. So this company definitely has a healthy amount of cash. Next, let's take a look at debt. This company definitely is paying off its debt over time. And that's definitely a great thing to see. Right now, the company is sitting at almost $1.3 billion of debt. And this company almost has enough total cash to pay off its total debt. And that's pretty impressive. I mean, if we take a look at quarter 3, 2017, this story would be a different. But now quarter 2, 2019 is definitely a whole different story. Now it seems to be a 1-to-1 ratio, when back then it was almost a 1-to-2 ratio. So here we can see the debt and its timeline. The next time this company owes any money is in 2022, followed by 2024. Then the next one is 2026, and that 2026 is when most of the debt comes off at $805 million. That's about 70% of the total debt. And that one is only a 2.125 interest convertible senior notes. So that's great news. This company has no debt to pay off until 2022. And that's such a long time for that. So for that, Bull Solo gets another point. This company has good cash, is paying off. It has a nice cash to debt ratio, and the debt is not due for a long time from now. Finally, these are some bad things that we need to consider, right? These are things that could happen, and it's always the risk of investing. With AMD, these are the most important things in what I believe, right? The biggest thing is, what if Intel has a secret CPU cooking up? What if NVIDIA has a secret GPU cooking up? What if one of the Ryzen's or their EPYC processors becomes a target of some form of virus or malware? What if slowdown in China continues? So all these are pretty much the dark side of this company. And if any of these happen, it can definitely hurt the company in the long run. Next, we're going to take a look at the outlook based on analysis. And this right here, we can see that the company is a growing company. We can see for December 2019, this company is estimated to make 62 cents per share. And that would give the company a forward PE ratio about 50.85. on the following year of 2020, this company is estimated to make $1.04. That's actually a huge jump compared to the 60 cents. And we can see that forward PE ratio drops all the way down to 30 to 34 cents. And we can see even from revenue, this year the company is expected to make $6.75 billion of revenue, and next year is expected to make $8.41 billion of revenue. A huge jump in revenue, and we can see that this is definitely a growing company. Just in perspective, right, previous revenue this past year, 2018, was $6.47 billion, and 2017 was $5.25 billion. But remember, 2018 was a huge market jump because of the blockchain sales, and that did slow down. So it's impressive that this company is still actually going to make more sales this year than last year, even though the last year it had help with the blockchain. So based on this analysis, the company is growing, forward PE ratio is decreasing. For that reason, we are going to give a point to Bull Solo. Next, we're going to take a look at outlook based on the company. This is coming from their slideshow, and they are assuming revenue to be up mid-single digit percentage for year to year. So mid-single digits for me means somewhere between 5 to 7%. I'm going in the low range, so I'm going to assume that this company is going to make a 5% growth compared to past revenue. So a 5% growth would make this company have a revenue of $6.79 billion. If we take a look at analysis, they say this company will make about $6.75 billion. This company is actually pretty much intact. But I do believe that we are going to see a beat on revenue when compared to analysis, right? A company usually tends to go a little more conservative, and for them to be giving 5% of mid-single digits and 5% would already be beating analysis, then that to me gives me a good feeling for how the company is going to do for the year. So for that reason, another point for Bull Solo. So what would I value it at? Now this depends on the type of investor that you are. With my background, I tend to like semiconductor companies the most because this is where most of my knowledge from school comes from. And for that reason, I feel like I understand what's going on with this company a little bit better. And as I know, AMD is definitely a growing company. We see that it went from from actually burning money to making no money to now it's showing small profits. So that to me is the definition of a growing company. And based on everything we saw all those big names being called out in what the company's doing. We're seeing the huge increase in sales in Epic servers. I definitely remember all the things we saw in the dark slide, and those are things that one always needs to keep ahead on. So even with all that, I would definitely be happy paying a 30 to 40 P ratio on this company based on the earnings per share for 2020. So 2020 had an earnings per share of $1.04, which would mean that anything around $30 to $40 would be okay for me to buy this company. And luckily right now it's sitting at way below that price. I think right now it might be sitting at $29, maybe low 30s. So for me, AMD is definitely looking pretty good to buy. But this is not just about AMD. We're going to take a look at all the other semiconductors. But AMD is definitely a company I would invest in. AMD is definitely a company that is looking good to invest in. So I hope you guys enjoyed the episode. Let me know what you guys think. Post on the comments. Give me a thumbs up. Don't forget to subscribe. Like I said, the next few episodes are going to be based on the semiconductor world. So we're going to take a look at NVIDIA. We're going to also take a look at Intel. We might take a look at some of the other ones, TSM, and what other I definitely have a few more that we can take a look at. So post in the comments which ones you want me to take a look at. Take care, guys. Have a good night, and see you next time.